Welcome back to the channel, everybody. I am Mick Alphany. Welcome back to the show. Welcome back to the show. Let's get right to the article here. So this article is titled Ripple versus SEC to end next month. They're going, they're losing it, going insane with these prediction dates. It's like every other day we got a new prediction date. Just let it happen, man. Don't worry, it's coming soon. But let's read this little tidbit here, okay? All right. It says, at a recent fintech summit in Dubai, Ripple CEO Brad Garlinghouse shared a fresh perspective on when the legal dispute between the crypto company and the SEC might come to an end. Specifically, Garlinghouse stated that the case against Ripple by the SEC was started 2.5 years ago, so it has certainly been a bit frustrating and slow. But the good news is we are at the end of that journey. Now, that's what I like to hear. That's telling. Okay, that's what I like to hear. Now, let's keep going. It says he expects a resolution to the SEC case against Ripple in the next 2 to 6 months. Okay, so we're back to that same timeline that came from Ripple, not the lawyers, but came from Ripple the first time. So he said before, someone, I believe it was Brad Garlinghouse, like around June. That's what that individual was saying. You know, the May and April, that came from lawyers. But I believe it was Brad that said around June, right? And then there was another prediction of December that came from someone else in Ripple. So it's still the same time frame. So we'll see what happens. Nobody is in control of this but the judge. You know, I say just relax until you have something solid. I don't see the purpose in this and stressing out about it. We're in here now. We're in the fight. We've been doing good the entire time. Relax. Don't stress yourself out. You know, just continue to do good business, you know, and if a person is an investor in XRP, continue to stay on top of the catalyst. But OK, I guess that tells us a little bit more. It says he expects a resolution to the SEC case against Ripple in the next 2 to 6 months and is optimistic that it will be before the third quarter. We will see. I'll take it. I'm ready. You know, got me stuttering away. I'll take it. Look, XRP explodes. As soon as that happens, XRP, I expect it to explode. Just my humble opinion. It will literally drag XLM up with it every time. It happens every time. XLM will go up with it. Right? Algorand will get the play. Quant will get the play. That's pretty much regulatory clarity for all the bank coins. So anyway, we know that. Let's move on here to another article, okay? Shout out to Pay Me an XRP. Shout out to Lil Boss. Listen, people, I got to make an announcement. It's official. My channel has been deemed a security. The SEC has deemed my channel a security. According to the esteemed Steady Eddie came in once again with the hilarious comment, as usual, this morning. If you always want to laugh, listen, just go to the comment section. Just every once in a while, Steady Eddie will post something hilarious. In my humble opinion, that's how I take it. All right, so this article here is from coinedition.com and is titled U.S. Regulatory Paralysis Impacts Jobs and Investments. And it goes as such. XRP advocate John Deaton requoted analyst Susan Friedman's take on U.S. regulators, highlighting the point that U.S. regulatory paralysis has real, measurable impact in terms of jobs and investment lost. Of course, everyone's going overseas and they're going to take their business is going to expand overseas. That's jobs that could have been here. And correct me if I'm wrong, people are having a bit of problems with that diversity in jobs. Now, what they're going to say, well, there's plenty of jobs. Look at the data. A lot of those are warehouse jobs. They're jobs people do not really want to work. You know, a lot of people have specialties. They have degrees and they're not getting the ability to use them, right? Things are very, very tight right now, very competitive. So when I hear about the data on jobs, you have to clarify what types of jobs are you talking about that are in abundance. Are those job postings being taken down, or are those long posted job advertisements being counted as well? You see, there's a lot of manipulation that goes on with that. But anyway, yeah, it's going to have a definite impact. But the tweet here, it was subtweeted from Susan Friedman, says, fears regarding innovation moving overseas are not overstated. Crypto industry players are already migrating to places like Europe, where the rules of the road are clear thanks to MiCA. And I don't know if it was yesterday's video or in one of the members only videos I just remembered. I just did, where we went over something that's very interesting about MiCA, right? It says U.S. regulatory paralysis has real measurable impact in terms of jobs and investment loss. All right, so now let's move on to another article here. So now this was a very jam-packed article. I had to scroll all the way to the bottom for this little bit here that I thought was very potent. It's from cryptonews.com. It's titled, XRP Price Prediction as 1 billion trading volume floods. And it says this all the way at the bottom. Check this out. It says it could easily, XRP, shoot towards $1 in the immediate aftermath of a favorable outcome. I definitely agree with that. I think go a little bit higher. I mean, at lightning speed. It says while it could go on to surpass its current all-time high of $3.40. I also agree with that. And I think you'll see a little volatility around that range. I've talked about this before. So, and let me clarify, those prices that I've discussed about XRP, I think I only talked about XRP, Quant, and XLM. And the XLM was an article that said if XRP goes here, then XL to some price, then the XLM could go to $6. That was from an article, so that wasn't my price prediction. But when I'm talking about $3 to $5, and then was like 15 to 20, and then $20 to $30 range, those ranges, those are for future times where everything is up and running, and we're doing what we're supposed to do whenever that's going to occur. And obviously those timelines are in flux based on what the governments are allowing, regulators are allowing, what central banks want to do, because they're in control of when everything gets deployed. So those time periods are going to fluctuate. That's why we have to stay on top of the catalyst to make up our own minds about when we think things are going to happen. How long do people want to hold? Are they in it for long term, short term? That's up to the people to decide. But I believe that should be decided based on catalyst, right? You come up with your own idea of timelines. However, around this range here, that 3 to 5, lots of volatility. Once you get to $2, people are already, I'm telling you, they're already seeing absolutely disgusting gains. People are sitting on a ton of XRP. Same thing with XLM. I'm telling you, listen, it's going to be so. XLM gets back to that 60 to 71 cent range. When did it go to the high? It went from, I think XLM, when we got in, XLM was like 31 cents. It was like that February or March. And then it went to, what was it, like 79 cents in May or something like that. You can check the timelines for yourself. You'll see what I'm talking about. I think it was like in May. It happened quickly because that bull market was coming in. People were sitting on disgusting gains then. This is sort of the second time around, really. Everything went up in that bull market. People made disgusting gains. But anyway. So I expect volatility there as well, right? People are going to take profit. They're tired of holding. So, look, but once that volatility starts to consolidate a little bit, boom, it's going to fly past that. Like this, there's no way I see XRP staying around at $3 to $5. Absolutely not. But we will see what actually happens. We'll keep abreast of everything that's going on, and we'll stay up to date on the catalyst. All right, so now let's move on to another article here. There has to be a cause for every effect, everyone. I look for a cause. All right. That's how we operate. We have to work with something solid here. Just my humble opinion. So then we have this tweet here from from Brendan Berry of Ripple. And it says here, great to speak with at Payments, payments.com. We looked at a lot of their documents. Very good website. It says about crypto utility and cross-border payments. It says Brendan Berry of at Ripple tells us why B2B, that business to business, cross-border payments and remittances are a space in which you can see the impact of crypto and blockchains here and now. Of course, they're going to be needed. With the multipolar world coming up, you're going to need something to glue all the systems together. Everything. And it's funny, there's an interview. I don't remember who did the interview. I think it was Gilbert Verdian. Oh, did you see that Quant? There's a clip here. I have it, actually. I'm not going to play the clip, but I have the article. You know what? Let's just jump right into the Quant article because it just bleeds into this. There's so much crossover between Quant and XRP as well. But pretty much what Brendan Berry was going to say is that the utility is what's going to make everything take off. The utility. I think we all know that, but there's so many, people who don't believe utility is going to do anything, even though with utility you have to use, like for instance, the payment channels. If you're going to use XRP payment channels for all that crazy speed and breaking up payments, but still have it considered as one payment, and you're going to utilize guaranteed exchange rates, all this stuff, you have to use XRP. Thus, that utility means more and more XRP can be used if the banks are going to use payment channels and things like that, those types of mechanisms, right? And with payment channels, you can only use XRP. I showed the screenshots from the was it xrpl.org, or it was from the official website. So people were able to read it. That's a fact. Only XRP can be used in those payment channels. Now I want to go here to that Justice Quant article here. They're not article, but they made a tweet with a little video attached. And here, I believe this is the one. They've released a few videos, I think. But Gilbert Verdian is talking about the glue, literally the interoperability that is needed to glue central banks all together. Then the central banks to the commercial banks. Oh, this is going to be. And then once you glue them together, their rails together, then gluing them and their systems together with the rest of the legacy system. This is the beauty of the legacy system not being unified. All right. Some of them are going to just use account to account systems. Well, when it comes to Quant pulls all of that together. Can you even imagine with that circulating supply and QNT being at the crux of everything, gluing all of that together, any of that capital flowing through Quant? Yeah, I'm very excited about Quant. I'm always very excited about Quant. So I just wanted to put that one in there. I think that's very potent and something to keep in mind in the future. So now let's move on here to a little bit of Algorand news. One of our warriors, Stacey Wharton, is roaring again, doing a great job again. This tweet says this. It says, a different world indeed, and a better one too, for creators, builders, and fans alike. Our CEO at Stacey Wharton discusses the potential of micropayments at FT Lives. That's another thing. Stacey Wharton is on Financial Times. We've been covering a lot of articles from them. They have a lot of powerful eyes reading them. This is great. Great for business. Good move, in my humble opinion. And Algorand's been doing that time and time. This is great advertisement. This is a great way to inform very powerful individuals who have some capital, maybe wanting to get into crypto, but not understand the bank coins, the utility coins, the power of them. And Stacey Wharton was on stage letting them know why utility is the best, Algorand is the best. So anyway, says this, our CEO, micropayments, it says crypto could be the key to opening up the world of micropayments, says Stacey Wharton. Quote, you can monetize anything as long as you have micropayments. It's a different world. So of course there's different degrees of micropayments. Another term that I would like to slide in there that could be, used interchangeably with micropayments would be like just fractionalized payments. For example, like I said, the problem with commercial real estate, they're going to continue to have a problem. People don't want to go back to work. But if we had regulatory clarity, someone who's building on Algorand could break those, the selling of that commercial property up into pieces. Now, people will be more willing to buy the pieces, right? And then you can make it move that way. You can sell that and move that value that way, break it up, fractionalize it, right? Then you worry about, there's a lot of different ways you can actually have people come and actually work in those offices. I'm not going to discuss that now, but yeah, there's ways to do it, right? And then you have a huge pushback. So I also have to take into account how fast this push is going to take place, where a lot of companies are trying to force their workers to come back. And whether that actually is effective or not, that remains to be seen. But there are alternative methods to getting people who actually want to work in an office and be supervised, all that stuff. All right. but we won't discuss that now. Okay, to rub some people the wrong way. There's a way, but that's on that industry. But I'm just concentrating on the fractionalization of that and moving that particular value in capital. Break it apart. It makes it easy for people to want to buy it. Right? Instead of $500, okay, so you can break that up into 5 $100 offerings. Now 5 different companies or people own that commercial real estate offering. Right? It makes it so easy. And this is what Stacey Warden is trying to tell them. We have the key. We have the solution. We have the power. We just need to be unleashed. And I agree. So once again, Stacey Warden comes in, roars like the lion. You know, we all roar. We're all lions here. And makes a huge impact. Okay, so now here's another little article here. This is on Algorand Foundation. And it says this: say hello to our Algorand interns. This talented, diverse group of international students will support our efforts to grow the Algorand ecosystem exponentially with impactful projects that solve real-world challenges. Now, this is what I like to see. This is a good move. We see Algorand doing this. We see Ripple doing this. I believe Stellar has some things like this going on as well. What they're trying to do, and Algorand in particular, they're trying to bring in the most brilliant minds possible who have innovative ideas, and we're going to be building on chain and really push things forward. And this is how you stay ahead of the competition. This is what ensures Algorand will have an extremely bright future. I mean, the foundation is already solid. We have one of the absolute best teams in all of crypto, and then you're continuing to build. That fire, that's why one thing I love about Algorand, that fire never dies out. And when we have a bull run, I think we will see some wonderful things happen with Algorand. Simple as that. I stand with all the bank coins. I'm not going anywhere. I stand with all the bank coins. Simple as that. That's not going to change. All right, so now let's move on here. Let's see what else we have to work with. So then we have a little bit of stellar news. Now, I'm going to put this on your table and you tell me what you think. Am I misinterpreting this? Now, there was this post here. This was from, I think, a day or two ago from Cheesecake Labs. It's talking about the tokenization of real world assets. I already told you, I think that Stellar is going to run wild when it comes to tokenization. What does it do to that price? I mean, if everything is actualized and we start to have a lot of value float across chain from assets that are maybe commodity backed or, you know, tokenization of otherwise illiquid assets flowing across Stellar, since Stellar is so easy to issue on. But this here in this video, there's a part where one of these gentlemen here says he's talking about advantages of Stellar, and then he says, and those are some of the reasons why a lot of our partners are choosing Stellar. Who are these partners? You're telling. Who are these partners? Now, I cannot tell a lie. I was very excited to hear that. They always tell on themselves when they talk too much. Their lips betray them, right? It's the same way when Donnell Dixon was talking about all these banks that were coming to them. Remember that interview? And now this individual, they're just talking about, what's this company again? Cheesecake Labs. Okay. And then he goes on to say, that's why a lot of our partners, who are those partners? And they're all choosing Stellar. Now, that is what made an impact on me from that video. That could be powerful. That could be good. Listen, it gives you somewhere to grow from. It lets you know that a multitude of entities are interested in that particular chain. So I like to hear things like that. That got me very excited. I'm interested to see who these other partners are, how they're going to be using Stellar. Stellar continues to do a good job. So now we have this article here. It's on wallstreetonparade.com. And it's titled Deposits at JP Morgan Chase and Bank of America and Wells Fargo Shrank by $465 billion year over year. You know what's interesting is that they continue to tell everyone that everything is going well. I mean, but they're doing that in every possible way. They say the economy is doing well. They say the banks are doing well. When all of the pro-economists and researchers are saying, hey, there's a major problem. And then the people themselves are able to see that bank after bank is collapsing and falling. Now we have 720. Did you see that video I released earlier? It's a short video. 722 banks are at risk for bankruptcy. Now, maybe they don't go bankrupt, but they're definitely at risk. That's unbelievable. That's mind-blowing. We had a pro-economist come out, a respected economist come out the other day and say, hey, listen, this is like the prior banking collapse. So, and they're expecting many, many more banks to collapse over time. That pro-economist said this is just the beginning. And yet they continue to tell us everything is going good. But we have even Wall Street on parade has to let you know the facts. And these factual numbers are coming from Fred, the federal government's website, right? So since the banking crisis began making headlines at an expensive media real estate, the narrative has been that deposits are fleeing the small commercial banks and flooding into the biggest banks that are perceived as too big to fail. That's what we've been reading. Yeah, sure. So, and thus offer a safer venue for deposits. Well, that's what a lot of people believe. I don't trust the banks. I don't believe in the banks. I believe in gold. To protect my value right now while everything is bad, sure. Maybe I might choose to use fiat a little bit here and there, but no, I trust gold. I'm gonna tell you that right now. I'm not taking any chances, but that's what we've been reading, that a lot of people are taking their fiat out of small banks and putting it into big banks. But let's continue on here. So it's because these mega banks are the same ones that the Fed has been bailing out since the financial crisis of 2008. Wow, shots fired. The narrative requires believing that our fellow Americans are, whoa, dumber than a stump. There's some strong language here. Holy smokes. It says we decided to check out. You know why I say that? It's like, listen, if we're in regular life and someone talks like that, no problem. But when I'm reading something like this, I'm expecting I guess I expect a certain level of professionalism, I suppose, but I suppose not. Times are changing. That's why I usually react that way when I read something like that in one of these articles. It says, we decided to check out the narrative for ourselves. Not only is that scenario wrong, but it is also decidedly wrong. And it's so easy to get the accurate figures. Uh-oh, they're about to tell that from where we sit, it looks like there might be an agenda by someone to harm smaller banks. I thought the same thing. Did I tell you there's a war? Didn't I say it? Wall Street on parade is saying this. The big banks, they're stepping on the toes of the small banks. And I think that a lot of them want to teach the small banks a lesson. Now, we covered some articles. This was about a year ago, where the small banks, they were complaining openly. They had a meeting with some of the, central bank figures and some of the people at the heads of the bigger banks. And they were openly complaining about things that were going on in the industry. This included CBDCs, right? But that wasn't the only thing. And the bigger banks did not like that. And let me tell you something. A lot of these powerful entities, you say the wrong thing, they don't care who you are. A small bank, a YouTuber, they don't care. They will take action against you and try to punish you. This is each Friday at approximately 4:15 p.m. The Federal Reserve releases its H.8 report showing the assets and liabilities of commercial banks in the United States. Monthly deposit data is included going back 1 year, as well as deposit data for each of the last 4 weeks. Data is also broken down by 25 largest banks and approximate 4,000 small banks. Equally helpful, the folks at St. Louis Fed make it possible to chart much of that H.8 data via its Fred charting tool. The 25 largest banks in the U.S. lost a total of $644 billion in deposits between April 27, 2022 and April 26, 2023. Wow. Ooh, somebody's telling. Somebody's in trouble. That's very telling. Wow. Like I said, there's a war going on. This does not surprise me. Now, will anyone actually get in trouble for that? Who knows? It says the 3 largest banks in the U.S. as measured by deposits are JP Morgan Chase, Bank of America, and Wells Fargo. Between April 27, 2022 and April 26, 2023, JP Morgan Chase lost $184 billion in deposits. Bank of America lost $162 billion in deposits. And Wells Fargo lost $118.7 billion for a combined loss in deposits of $464.7 billion, representing 72% of the decline in deposits at the 25 largest banks. That's a crystal clear indication of just how dangerously concentrated banking has become in the U.S. Very dangerous. If the regular people only knew, I know you know, The deposit losses at JP Morgan, Bank of America, and Wells Fargo are more than twice what the 4,000 small banks lost. Wow. They're just losing money outright. Has nothing to do with the small banks. Then the 4,000 small banks lost in total during the same period. Their combined loss in deposits was just $210 billion. This is a heck of an article. Once again, it's on wallstreetonparade.com. Check them out. They are telling. Good job, Wall Street. Who wrote this? I want to know the writer. Who's the writer? Let me give you some credit. Pam Martins. Shout out to Pam Martins and Russ Martins. Whoa. Now that's some research for you. We've dealt with Fred before. We've never gone that deep. They put the pieces of the puzzle together. All right now. So now we're going to end off here. Okay. And I have a lot of other articles here, but I'm going to keep this video a little bit shorter today. So all the rest of these articles I'll put into a members only video tomorrow. Okay. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.